Good morning, traders. It is Thursday, the 17th of December, 2015, 8:01 a.m. Chicago time. Thanks for joining. Hope you're smiling today because the Fed raised rates 25 basis points. We finally have our launch and that mess somewhat behind us. We start looking forward to March. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Lots of news, but again, with the Fed increased rates for the first time in 9 years from 25 to 50 basis points. Quote, economic conditions will evolve in a manner that will warrant only gradual increases in the federal funds rate. The federal funds rate is likely to remain for some time below levels that are expected to prevail in the long run. So there's your shot across the bow. German IFO Business Climate Index slipped to 108.7 in December, missing the 109.2 that was forecast. Norway held its benchmark interest rate when most were expecting a cut to 50 basis points, a cut by 25 basis points. Instead, the rates remain at 75 basis points. That's a surprise to the market. AIG is buying back $30 billion worth of stock. It is a key component of many multiple indices. Goldman Sachs cuts U.S. healthcare providers to neutral from attractive. Again, healthcare is one of the key components to the S&P 500. Boeing got a $10 billion order from China for delivery between 2017 and 2021. China's Shanghai Composite closed at plus 1.8% overnight. The markets rallied strong. It paced the gains in Asia. Germany's DAX is up 3.3%, leading Europe. And then just about a half hour ago, we got initial claims, U.S. initial jobless claims, 271,000 versus 275,000 expected, so slightly better. Continuing claims, 2.24 versus 2.2 million, slightly worse. Q3 current account, slightly worse, negative 124 billion versus 118.6 billion expected. And December Philly Fed business outlook, negative 5.9 versus plus 1 expected. This is the lowest since September. The September reading of negative 6, which was a 2-year low before that. So that's what's happened overnight. Looking at today and what's ahead of us, we have the leading index, U.S. leading index, coming out at 9 Central, 10 Eastern, expecting 0.1. And natural gas at 9:30 Central, 10:30 Eastern, expecting negative 4.3. As far as speakers, we have a clear deck, but I am quite certain, based on prior releases, given the surprise, the importance of yesterday's move by the Fed, I am fairly certain that we will see a circus of unannounced speakers come out today and talk in the media. So, but that's what we have on deck for today. Let's look at yesterday. So yesterday's primary hypothesis, if you recall, was responsive selling. Again, you can always, these are done pre-market, so this is not a hindsight kind of analysis like you often see online. I'm doing these before the market and then assessing how the futures performed versus what was expected, and that gives us an idea of how things are performing or how things are moving forward, and it gives us an idea of how the story is unraveling, so we can have a good handle on how we expect the future to unravel. And it helps us also detect, reviewing what we've done, documenting and reviewing what we've done and doing it here with you live and public, is a way of helping just build the story, and also get early recognition of when things are no longer operating as normal. The last 2 weeks have been abnormal in the way they've been trading. We've had some pretty strong swings, a lot of V bottoms, a lot of tweezer tops, things like that, making for a tough trade. But yesterday, on the Trader Bite, the plan was very simple. We're opening out of range in a gap. The expectation was we take the overnight high, we get responsive selling back into this. Actually, the number that I was looking for is take out the overnight high, responsive selling back to 2044 is what I was looking for. A retest of this naked point of control, an attempt to push higher, failure, and then I was looking for value high right here, given that this is a normal distribution profile, a very orderly trade on Tuesday, and then the ultimate goal is for it to hit the 35 and a quarter and then chop around before the FOMC movement, which looked like that. And what has happened, as you can see here, is pretty much that. Except that it did not get to 35 and a quarter ahead of the FOMC. It hit it on the FOMC announcement, giving us an FOMC low at 2031 yesterday, with the announcement coming in at 47. Right in here is the announcement. We first responded by selling 16 points down, and the book was very thin. It was a really as freaky as it looks. I love that trade. You just find out immediately if what you have on is correct or it's not. Did some pretty good trading there, and then it just ripped up to 2055. 75, I believe. Yeah, 2055, 75. And so we had about a 25 point swing on the Fed. Pull back to mid. Look at this double pullback to the mid, back to 43.50 on the mid here with the IB low. For a 6 point bounce. Beautiful setup there. On the second touch, I pass. I don't take second touches. And then it proceeded to fail from there as expected, and then it just ripped up higher into the close. Overall, the market was very strong closing. It took the news very, very well. I think the market was anticipating and was looking for this to happen. I know I have been, although I expected the Fed to come up with excuses not to raise rates. Now that the rates have been raised, there's a 43% probability that rates will be raised again in March, right now priced into the market. We'll see how that goes. Again, my guess was they're probably going to hold off for a while, but I think they overstayed their welcome as far as the market's anticipation for them to do something. With this being out of the way, though, it allows the market to actually price in risk a little bit better. Interest rates at 0% or a quarter percent really aren't doing much, and with a 25 basis point increase, we are far away from normalizing how our monetary policy works. Okay, so we're not there yet. The idea is to do this gradually. So we end up pushing towards our big MC point of control. If you go back to Monday, I talked about this. I talked about the idea that, look, the expectation from Monday onwards is for strength. The market's likely to push back to the MC point of control right there, 2072.75. Guess where the overnight high is? The overnight high is 2072.75. Oh, didn't mean to do that. Meant to bring this in here. So there's the overnight high, 2072.75. What do we have at 2072.75? And you guessed it, we have the MC point of control right there. So if I squish this, you'll see that 2072.75 is the most traded price in this balance zone. Again, the balance zone starts on the 23rd of October and now encompasses yesterday. We traded these lower high volume nodes beautifully. The auction was really orderly, but the auction wasn't orderly actually over the last 2 weeks, like I said, but it did accomplish its task. It did test out these areas below, and now with the overnight high at 2072.75, we did expect, and I did talk about this. I did say that later in the week we're expecting it to get back to that overnight point of control. Shorts, be sure to cover to hedge your risk or cover some of those shorts. Take something off the table. I hope you did. And here we are today in a gap again. We're trading above. Let's clean this chart up. We are currently trading at 2069.50. That's the last price. Yesterday's high at 68.75. In the next 20 minutes, the expectation is for it to pull back and open on the edge of yesterday's profile. Yesterday's high was weak. I'm expecting the 68.75 to be tested during the day session today. I am expecting this today to pull back down towards the 2058 value high, although it's not clean value, but it's likely to be tested. I expect the market to consolidate, and then I expect it to push through to 72.75, and that pretty much accomplishes hypo 1 for me. Given yesterday's range, given its aggressiveness and the push overnight, I expect today to be somewhat relaxed. I expect today to be more of a digestion type of trade, just like we see after the non-farm payrolls. The market kind of takes a moment to digest what it's received already. So that's basically hypo 1 for today. I don't expect a big run. Let me turn off all these levels so things aren't as messy. I don't expect a very big move today, although I could be wrong. We are up against these high volume areas up here, and we are basically on our way to new all-time highs again. So there's a lot to work through here. The market's got quite a bit to deal with up here. So as I shift this up, you could see the tops that it has to kind of work its way through 73.75, 85.50, and then the 95.50, and then up to the 2102.50. Expiration is tomorrow. By the end of today, we might see a big push in volume and final movement to finish the rollover. Expirations at 8:30 a.m. on some of the options tomorrow before the open. So just be cautious. Generally, the Thursday before expiration Friday and expiration Friday are not fantastic follow-through days. They tend to be choppy, and there tends to be a lot of stuffing in the dome as calendar spreads work themselves, work their owners into new positions. The biggest things to remember today, to note today, is the week high. Uh-oh, looks like someone's in trouble. Is the week high, the fact that we've pushed overnight to the overnight VPOC, which is likely to be tested this morning, and we are in this high volume node coming in. So I expect the market to relax through here and take its get some rest. So that's what's expected for today. Hopefully you find that useful. For Stage 5 traders, we have our AMA at noon today as usual. I'll catch you then. Take care, everyone.